very cliched lump sum or SIP?
Yeah, I already answered that. It's time to gulp. You continue your SIPs, but if you have disposable, then you gulp.
Great. Last couple of things. Something on retirement. I mean, people, when they enter, they are very long-term investors and they are here for the retirement, right?
Yeah.
But disruptions like this, or massive swings like this.
See, I think there will be a lot of youngsters who are listening to us. I want to clarify to them that retirement planning is not for retired people. Yeah, I hope people understand. Retirement planning is not for retired people. The people who are watching us right now, they are the ones who need to plan for the retirement. That is first. Second is that even when people talk about retirement, there's no such thing that if you retire at 60 or 65, you have to suddenly become very conservative. Because if you retire at 65, you don't have to plan for 70 or 75. The oldest person in the world was what, 120 years or something?
110.
119. Yeah, 119. So if the oldest person in the world is 119, then you at least need to plan for 100 or something.
No, eventually, I think the way the life expectancy in India is going up, and it's gone up significantly.
Yeah.
I mean, we are talking about, if let's say even if you retire at 65, you're talking of 20 more years of supporting
at least 30-35 years more, actually. So it's about, you need to invest in equity, you need to invest for long term. These are the times, when the SIPs need to be taken advantage of. And if you run away at these times, then there's no point talking about retirement planning.
Yeah.
All these, like somebody said, all past corrections look like missed opportunities, except this one.
Yeah. So coming to the last question in this series, and again, this is for a person who has seen the market, seen the cycles.
Oh, okay.
This is from the perspective of someone who has actually lost money only from my profits. So I have lost money from my profits and not from my principal. And I congratulate. I'm sure this cohort might be in a minority.
Yeah.
But he's still on positive side, and for him to think that the wait is over and whether he should move now to other asset classes, or how bad the virus situation can go.
No, I think that if somebody who's an experienced investor then obviously knows that when there is an upswing, what kind of profits can be made and how it overdoes it on the downside. I think you should not only stay committed, you should actually add more, because you already have proof of the pudding, and I don't think there is any other asset class which can compensate for what equity can actually make. So no doubts about it. I think they need to stay committed, maybe they need to add more.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.